everybody.
Good afternoon, everyone. You know what time it is. What time is it, Carrie?
Stat time.
That's it.
Yes.
You haven't done the stats in quite a bit.
Yeah.
We're missing the weekly
I didn't think
ones.
we did. Oh, yeah, the Tuesday, Thursday ones. Yeah.
We're waiting for those things to come back online.
Yeah, they haven't.
I may have to make an adjustment somewhere.
Mm-hmm.
But anyway, it is Wednesday,
Yes.
the 8th, correct?
Yep.
I want to make sure when I got on. But today's Wednesday the 8th, and we're going to be talking about, as we always do, the month's stats here locally on Staten Island and what exactly is going on. Because there's some interesting, you're going to point out some interesting stuff in this report.
Yes.
A lot of things going on.
Mm-hmm.
A little bit more, it's a mixed report, but it's interesting to say the least, as always. These reports get more and more interesting as time goes on because it is absolutely insanity when we talk about home sales as a general over the last 3 years. It's just trying to figure it out is kind of difficult. But stock market's at an all-time high.
Is it?
Yes, I know you're not big into stocks,
I'm
but
not.
stock market's at all-time highs.
Wow.
AI is doing extremely phenomenal. How long does that last? Is something that we have to kind of see. But the big thing is, I'm sorry, I was looking out to see if we were taking over the parking situation here. But the big thing is obviously what's going on in your backyard, Carrie.
Yes.
What's happening out there in Annandale? Anyway.
Yep. Well, we have the Staten Island Stats for you today.
Mm-hmm.
Yeah.
And you're going to give me a rundown with the first one being.
Yeah. So that's the average days on the market.
Mm-hmm.
That has increased month over month 14.75%, so almost 15%. And year over year increased 1.45%.
So there's the first news of the day. The first column, the first news. Mm-hmm. Okay, so basically what we're looking at right now is the average cumulative days on the market took a 14% leap on the month over month, although it was around what it was in September 2024. It's only a 1.5% increase over last year at this time. Mm-hmm. But so the year-over-year difference is more what you look at because it's just, but it's not, it's an increase. So cumulative days on the market have been, at least on Staten Island, has seen it shift upward and upward and upward and upward. So it's taking longer to sell houses if you're on the market, and that's going to be pointed in the next piece of data that you have for me,
which is the month's inventory.
Yes.
So year over year, that has increased 20%, and month over month, it's increased 11%.
Okay, so now we look at month's inventory or absorption rate, right? How much the market can basically absorb based on the current sales volume, okay? So that's up 20%. That's significant, and it's something to pay attention to because what's that saying is that the ghost is here. I know it's Halloween. So what that's saying is basically the amount and the volume of home sales have been decreasing while inventory has increasing. So the leading indicators, this is what we call divergence, a divergence in the data, which is an important key element, like how the trend may develop. Now we've seen this happen before, so I don't want to like freak anybody out just yet. But that's something. When you see a 20% year-over-year difference in months inventory, it means inventory is coming up while houses aren't selling as rapidly. So that is a leading indicator and not a trailing one. So as time moves on, we have to see if that balances itself out, because I think that in the coming months, this may be a factor. Okay, the month-over-month difference is a whole 11%, but we're at 4.84 months of inventory. So basically, what that's saying is it's still considered by most standards, the six months is basically the buyer-seller variation here. So usually that's like the benchmark you kind of go by. If you're under six months of inventory, you're pretty much still in a seller's market. If you're under, but is coming closer to the 6.
Mm-hmm.
As the months keep continuing on, we've seen this kind of bounce around a bit, but it's been bouncing around to the higher side. So it's something we have to pay attention to because it is a leading indicator in like how things are going to look moving forward. It's concerning to say the least. I won't tell you, not a little bit. As far as, I mean, for buyers, it means that they're kind of waiting on the fence a bit.
Okay.
So what's the next thing?
The sale to list price ratio.
Mm-hmm.
So that has increased year over year 0.60% and month over month 0.30%.
Yeah. So sale to list price ratio, again, the year over year. Now it's fractional, but it's been on the rise for a while. I mean, the this is basically what a seller is willing to give as a discount on the sale. This has come up a little bit. Okay, so basically it went from 98 to 98 last year to 98.6. So people have still been bidding upwards. So basically, you're basically getting a 1.2% difference between the list to sell ratios. So most sellers will give only about a 1% discount on the stuff that is sold. Now, the stuff that hasn't sold is a whole different matter. So people will say that data could be quite skewed because some people will take offers, like they'll get offers significantly less than their list prices, and then the house eventually doesn't sell. So, but we've seen price cuts across the board. So it's been more frequent. And I think that's going to show up later as we move through the report.
Yes. So this brings us to the sold medium listings. The sold medium listings have increased year over year 2.50% and month over month decreased about almost 2%.
Yeah. So I'm sorry, this is on the this is
Sold medium
sold
listings.
median. Yeah. So basically, the sold median listing price is basically it's what these houses are selling for, where people are kind of looking when they um, putting their house on the market. What are they looking for as a price? That's come down a little bit on the month over month, but year over year, people have been persistently raising the price, which is currently at 689,000. Nothing really not too much there. I'm not really too concerned with that one.
Well, the new average listing has increased year over year, almost 5%, and month over month decreased 9%. I mean, sorry, month over month increased 9%.
That's
new average listing.
The new average listing continued. Yeah, that's so with that the new average listing, meaning houses coming on the market are more expensive, meaning at $816,000, almost 817,000. It's a 4% year over year increase. People have been asking upwards, but I mean it seems to be in line as we move through this. It seems to be in line with what the market will bear right now. So it's definitely something that I consider to be. It's it's moved in line with average and median sold prices being what they are. So I mean it's kind of moved along the lines. People haven't now. It's important to note it's what has sold that really makes these numbers what they are.
Yes.
Not the stuff that isn't selling, but it's not too much concern there, except for buyers, of course. A 4%. So I just want to just put this in perspective for you. If you are a buyer, okay, if you're saving money for a house, and why, like, this is key to what you need to understand. So if you have a savings rate of say 3.5% or 4%, you're saving your money at 4%, and houses are accelerating past 4%. You're saving against yourself. So basically, your ability. So time is actually eroding your buying power of a house. Then a lot of people who have waited, like if they waited the past 2 years, like we're noticing. I mean, if you look at the data, prices are still outpacing inflation or even interest rates. So interest rates continue their like their their they've been lower, and your rate of savings is not definitely not what it was even maybe a couple of months ago. They lowered the interest rate, the prime rates, and they basically it's killing people's savings accounts. So people who are saving are actually not saving at all if they're in the process of purchasing a house. I've said this before. If your interest rates are in line, I mean, you do have an interest rate on the house you're purchasing, obviously, but you have to weigh that out as a factor. Prices can consistently come above like a 4% year-over-year raise. Money in the bank is probably not going to suffice in terms of keeping up with the rate of home value increase. I mean, this is what people are actually putting the house up for. They're kind of expecting more. So I think the next two stats will bear that out a little bit.
Yes, so that would be the sold average sale. The sold average sale has increased year over year 5%, but decreased month over month 0.30%.
Yeah. So it's come down a little bit, like on the month over month. Not huge, but fractionally down. But year over year again, 5%, outpacing inflation. So inflation is somewhere around, well, they're saying 2.7%. Home prices consistently are coming above that benchmark by 2 times. So this is why, like, if you have money saved for a house, let's just say the market does drop, you still have to absorb the fact that the market's increasing. By the time it does drop, just the time that you actually took to purchase, by the time it drops, you really haven't really done much in terms of like saving money. It's not, and I heard a lot of buyers, they're like, oh, we want to see what the markets are going to do. Guys, I'm going to tell you, I think we're in an age of money right now that I call it modern economic theory. They just keep printing more of it. So if they basically need to cover a deficit, they'll debt it. And this is why house prices are what they are, because basically there is no real, how do you say, they've kind of risked off the bottom side of markets. So it's whether it's house, a bank can't, the whole institution of banking runs on household financing as being a primary resource for banks. And in order to avoid what they had in 2008, basically what they did was there's so many like levers to push if things are going wrong that chances of something like that happening again, or like there's people who are out there saying, oh, the end is near. Yeah, for some people, I think like in certain markets, it may be much more pronounced. It's still not 2008 in any market. 2000 people. Oh, I mean, you go on YouTube, you see this a lot. You see like all these people saying, "Oh my God, the sky's crash." Inventories are up. Remember what I said in that last one about your shoes? Just because the inventory's up doesn't mean they're going to part with the house, guys. For the prices that people are thinking. That's why when people are saying, "Oh, inventory's up, people need to sell," no, it's bad out that it's as bad as people say Florida is, and with the amount of inventory increases. Bottom line is, unless it's like an investment property, which you have those Airbnb situation, if it's a regular homeowner owned house, usually the equity position in the house is pretty high, and it hasn't shown any signs that people are willing to take that much less, even with increased inventory. So, where I think, and there was a report on new construction, where new construction is actually cheaper than existing homes for that reason, because builder has to move the inventory quick. It's a must. They usually have loans on the properties that have to be satisfied, like over in a shorter period of time. So the borrower will lend on a shorter time frame. So if they don't move those houses like quicker, they could default on those loans. That's why like there's a lot of development happening. Prices are coming down a lot more, but in existing home sales, it's not big enough to make a real uh, a real true indication that people are willing to part with their house for less, for too much less than what they want. They want people to pay. So they're just not moving on, even with the increased inventory. That's in Florida. Here, I mean, that could change. I mean, depending on the labor markets, which have been difficult, it could change. There are more. We did that thing on Fridays live about Americans under stress.
Yes, that was a good one.
Yeah. So Americans under stress. Basically, people they're typing in stuff about like debt consolidation, bankruptcy. These are search terms in Google that are actually been on the increase.
Yeah.
And we did that. That was last Friday, right? I think was it last Friday?
Maybe 2 Fridays.
Oh yes, 2 Fridays.
Yeah.
Sorry. Yeah. So that's. I mean, so that's something to watch for. I mean, if there's a rise in personal bankruptcies, but it could impact the market. But right now, it is not. It's not evident. There are some signs that it's there, and basically, just using Google search is basically telling us maybe there's some issue there, but that hasn't played out in numbers.
Yes.
But the next thing.
So we just did sold average sale. Now we have the sold medium sale. So year over year, that has increased almost 4%, and month over month, it has decreased 3.50%.
Yeah, about three. Yeah, so basically, the month that's pretty notable in a month over month scenario. So sold median sale prices down the month over month 3%, and up on the year over year almost 3.5%, and then almost 4% on the year. So all it would take right now is another month like we had two in a row, and basically the sold median sale is basically flat, because you'd have, if you compound this over a period of a few months, that's a key factor in knowing whether the markets are going to be going higher for real estate, at least locally. So if that is a consistent trend where the sold median sale price is down that much, a whole 3%, a whole almost 3.5% month over month, it's showing a bit of weakness. So yeah, it's showing. Yeah, that's pretty profound. So what's next?
Active listings. Year over year, it's increased 3%, and month over month, it has also decreased 3%.
Okay. So the month over month number there is seasonal, so I don't see any problem there. Because these are active listings, correct?
Mm-hmm.
Yeah. Not the month over month is not, that's not anything to be concerned with. Year over year difference 3%. Active listings they've been consistently rising. I think we did that in the absorption rate, but they're down on the month over month. So it seems to be pretty balanced there. I'm not too concerned with that number. We're getting to the more concerning numbers later on.
So that would be new listings. New listings have increased year over year, almost 25%, and month over month increased almost 17%.
Yeah. New listings are really on the increase. Now, what's the reason for that? That's the question. Now, that could be for a multitude of reasons. It could be forced sales. It could be of some sort. But that is a very, very, very stark contrast to the way it was just maybe 6 or 8 months ago. I think it's the biggest jump I've seen in new listings in years. in the last couple of years. For a single month-over-month difference of 16%,
Mm-hmm.
that's considerable on new listings. Usually it's been something that's been on the downside for the last few years. It's the first report we see on the increase. The real understanding comes from why.
Yeah.
That's where we can't necessarily tell you why that's happening. But um, a lot of it, I'm telling you, I think a lot of it has to do with people either being overextended on certain things. Um, there's a lot of factors. I rather not talk about.
Okay, so what do you think of the pending listings? The pending listings have increased year over year 12%, but
Mhm.
decreased month over month 3%.
Yeah. So pending listings are up on the definitely on the year over year. So this time last year was only 248. This year is 278. That's an increase, and I think that has shown that in terms of like the last couple of months, we've seen this. I could see it within just like how we like the amount of volume of calls, things like that.
Mm.
We've definitely seen in the last month or so, month and a half, that's increased, and that's really what that's reflecting. Um, but overall, this year it wasn't a great year, and I think the last part of this is why we're
Yeah.
going to tell you this is the worst I've seen in a drop in
Yes.
a long, 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 long time. This is not. This is. I hate to say, this is one of the most troubling stats that I've seen in years. This is a troubling stat right here, and I think that people need to hone in on this one. And give me the percentages, Carrie.
Uh-huh. So the sold listings have decreased year over year 14% and month over month decreased almost 13%.
That's so that's substantial. Those two numbers there. There was only 232 sales in the month of September on Staten Island. Now, I just people don't realize that is we're talking 2008 numbers. I mean, if you're looking at as far as volume of sales, that is not something that I would say is a big 232 sales is like that is I mean, usually September is pretty. I mean, there was 270 last year. There was 266. It was dropping last month too,
Mhm.
and now it's down to 232. That's a big drop. Um, is the market petering out in terms of available buyers who are willing to pay? That still remains to be seen, but this is the most, I think, of all the numbers we discussed today, and there's quite a few,
Mhm.
this is clearly the worst
Yeah.
I've seen in a long time. Just on the year over year difference, a 14% drop in home sales on a single month is not a good sign. I mean, from 270 to 232 is it's a notable change.
Yeah.
Um,
Year over year.
so people, I mean, people, they're just not, and there's an increase in inventory. That's the 20% months inventory increase is kind of coinciding with this. So those two factors, the months inventory and the sold listing. Sorry for not looking up because these numbers are pretty pronounced. Sold listings and months inventory numbers have seen the biggest increases, and that's a concern. So I think people need to keep their, if you're selling, these data points are not, it doesn't mean everybody, but it means something. It means something in terms of like where we're going to be looking in the next couple of months. So we really want to pay attention to basically how this how this the first thing we're going to notice over the next few months if this continues like these slow sales numbers is whether the sales to list price ratio could still hold up at this level, which it has. So it's kind of not changed things in the market too much, but I would say a 14% difference in sold listings year over year could the market continue at that pace? I think that's the question for next month,
Mhm.
and maybe for the next 2 months, because we'll see exactly. It's usually a 232 sale uh, volume of sales, 232 units is putting January into like the 150 category in
Yeah.
terms of home sales. That is not a good sign. There is one bright spot that may offset that, which is the 12% increase in pending listings on the year over year. So it has increased. Pending listings have increased year over year. That had to do with a little bit of bounce in that interest rate, but it's something to pay attention to. All
Mhm.
right, and that's pretty much that's the game here. That's what we have in terms of market data. So this report basically highlights a difference, a mixture of uh, higher sales numbers, higher inventory, higher list to sell ratio by a fraction.
Mhm.
But really, the stark contrast between that and this is the sold listings being down and the increase on the month's inventory. So those are the counterpoints that are the weighted factors in this report.
Yeah.
So that's really what we have to look at, you know.
Mhm. Yes.
Yes. And Taylor Swift's album came out this week.
It
Terry,
came out
excited?
last Friday. Yeah, I've been
Oh,
listening
last week?
to it nonstop.
Yeah.
Yeah.
Anything good? Is there a particular one that stands out? Top 10?
I really like Fate of Ophelia, which I
She
did
was
play.
talking about it
I
earlier.
did play.
She was talking about it earlier. You know,
Oh no.
well, yeah. But that's all we have for today.
No,
Yeah, and we'll
we're
go
gonna
from
get the ratings up today because I'm making an appearance. Hello,
that's Dom.
along with the new Taylor Swift, which it's not my case. I'd just like to let everybody know this month we also have the highly anticipated upcoming Biohazard album.
Oh, okay.
So we're just putting that out there.
Yeah.
Which
Should have wrote that
I
down,
do
I think.
believe will rival Miss Swift.
Okay.
Anyway, hello. Ratings just went up. I'm just telling you.
Ratings went up.
Ratings went up.
Dom plug. Give me the band name again. Concrete Burial.
He knows.
There we go.
Concrete Burial.
It's
Lucky
when I'm on
13
camera, it gets a little bit
Lucky
harder to
13
remember
Saloon
things.
this Saturday.
Lucky 13
Saloon in
Saloon.
Brooklyn. Concrete Burial. I will be there.
He'll be there drumming
I
away.
will not look this handsome
Oh, it's always an
Yes.
entertaining day.
It is.
It's always an entertaining day. But that's what we have for you today. Tune in. I think Friday we'll have something, and we'll check back in and do the stats next week for New Jersey.
Yes.
That's gonna be an interesting one. So
Yeah.
watch out for that. All
Yeah,
right.
keep a lookout.
Have a great day, guys.
Bye.